Hello and good morning. My name is Ylvi Hayden, and today I'm joined by my colleagues Cassandra Young and Carol Kilner. The main theme of this podcast will be financial accounting. We will also be talking about banking, inventory, and PL accounts, also known as profit and loss accounts. I will also be going over some key points, like a couple different accounting aspects and their uses, as well as balance sheets. First off, the different accounting aspects. There are 12 branches of accounting in total. However, I'll be covering only a few of them. I'll be talking about financial accounting and tax accounting. For the first accounting aspect, I'll be talking about financial accounting. Financial accounting involves the process of recording, summarizing, and reporting the myriad of transactions resulting from a business operations over a period of time. These transactions are summarized in preparation of financial statements, including the balance sheets, income statement, and cash flow statements that record the company's operating performance over a specified period of time. It is important for businesses as it helps them keep track of their financial transactions. In addition, financial accounting helps you communicate your business finances to outside parties such as traders and investors. The deadline for this accounting branch is usually at the end of each year. To develop a financial account, you will need your revenues, expenses, assets, liabilities, and equities. Now, for the tax accounting. What is it? Tax accounting is a structure of accounting methods focused on taxes rather than the appearance of public financial statements. Tax accounting is governed by the Internal Revenue Code, which dictates the specific rules that companies and individuals must follow when preparing their tax returns. To develop a tax account, you will need financial statements as in balance sheets, cash flow statements, and income statements. Tax accounting is important in any business as it ensures the companies comply with the tax laws. Tax accounting is important in any business as it ensures that companies comply with the tax laws. A tax accountant files federal and state income tax returns and offers a company a plan to keep them out of trouble with the state's laws. The usual deadline for this accounting branch is at the end of every month of the reporting period. I'll be now interviewing my colleague Cassandra Young. So Cassandra, what did you study / work before you came to accounting?
So for university, I studied legal assistant, and before coming to working here, I was a receptionist at a real estate company. So it was two completely different programs before getting into accounting.
Okay. And how long have you been at the company?
Since 2017, so 5 years now.
And what was your motive to start working in the accounting field?
I like knowing that numbers don't lie. 1 plus 1 will always be 2. There is no and, if, or buts. There's always an explanation to why a number comes to what it is.
Okay. And what's the most exciting / fun part of your position?
I don't think there's anything exciting about numbers overall, but it's just the fact that the moment when you know things are working and things are balancing, that it's not a thrill, but it is a happy moment. It doesn't need to exactly, it's not, numbers are never fun, but it's not boring either to me.
Okay. And what did you find most challenging?
When you're balancing the books and you're off by a penny or two, that's my pet peeve. Knowing the fact that you know that it adds up, but you're just off by 0.01, that's when I get a little peeved, and you have to go back and look at everything else, and it's probably just the smallest mistake where you switched an 8 and a 4, but your eyes are playing tricks with you. That's my biggest pet peeve.
And I understand you look after the daily banking for Logic.
Mm-hmm.
So what does this mean, and how does it relate to financial accounting?
I think my biggest role at my job would be reconciliating our bank account. So basically accounting for every transaction that comes in and out of our account, every bill, every payment that we get, everything that goes out. That would be the biggest.
I'll quickly be talking about balance sheets and the importance of it and what you need to do. A balance sheet is an important piece of financial information that every business owner needs to know in order to monitor the financial health of their company. Together with income and cash flow statements, the balance sheet provides business owners with the financial data needed to make informed decisions. Your balance sheet should be included as part of your business plan. Think of it as a snapshot of your company's financial position. What you own and what you owe. At a singular point in time, at the end of a month, quarter, or a year. So, how important is the financial accounting in running your business?
I think the financial accounting is an extremely important part of our business. Really, there's three important reasons why we do financial accounting. We need the data and the information in order to make good decisions. If our cost of goods to build things is more expensive than what we're selling them for to the customer, that's definitely a bad thing. And the financial accounting will show us that. The second most important reason is compliance. There's a lot of rules and regulations around operating a business from a financial perspective that the government requires us to file taxes and file restatements, so we definitely have to follow those rules. So that's another reason that it's such an important thing, is we wouldn't exist without it. And probably the third most important thing is around communication. So we generate financial statements, and so banks and investors need these financial statements in order to make decisions to whether they're going to loan us money or get involved in a project with us. So those are probably the three big reasons why financial accounting is so important to our business.
Okay. And do you have any background in finance? If not, where did you learn how to run the finances?
I don't have a degree in finance. My background's actually math and computer science, so logic and numbers have always been good. I honestly avoided every single accounting course I could in school. I didn't like it, so but now running the company, I definitely need to learn about financial accounting, and I've come to like it and understand how important it is. I basically learned on the job. I did a lot of reading, asking questions, taking courses, and that's how I got up to speed on it. We actually hire an external firm to look after some of the more complicated finance stuff, because it's impossible for one person or people in our company to be up to speed on all the rules and regulations around financial and tax accounting. On a regular basis, we have Cassandra that you just spoke to, looks after all of the financial transactions. I basically look after the oversight, setting up budgets, making sure we have the proper cash flow. So I'm involved at that level.
Okay.
Go.
Can you tell me about the inventory management and how it is with financial accounting?
So inventory is basically the assets we have to build products that we sell to our customers. So here's a couple of the products that we sell to our customers. So we have to buy all of these pieces, put them together, and then sell them to our customers. The inventory management is extremely important, because all of the stuff that we have in inventory on these walls here costs money, and it's money that's just sitting here and has no value to us until it's being sold to the customer. If you're a services company, you don't have any inventory, so you don't have to worry about basically money sitting on the shelf waiting to go out.
So what is depreciation, and could you give me an example of it?
So depreciation is really just an accounting term of how they allocate the cost of a product over the lifespan of that product. So to give you an example here, a couple years ago we bought a service vehicle to do all of our deliveries. So this vehicle, if it costs $40,000, we can't allocate that $40,000 cost in 1 year. The financial accounting methods have a certain number of years that different types of assets are considered useful for. So for instance, let's say the vehicle is useful for 10 years. At $40,000, it means you can use $4,000 of depreciation every year on that vehicle.
Last but not least, can you tell me about a profit and loss statement and how you could use it at Logic?
Yeah, a profit and loss statement has a whole bunch of different names. Some people call it a P&L statement. We actually call it an income statement here at Logic, and it's kind of one of the three main financial statements that our company that looks after our annual reports prepares for us. These type of statements are very useful for again, bankers, investors looking to get involved in your company. It gives you kind of a good idea of where your revenues versus your expenses and how you're progressing there. Internally here, we actually generate our own income statements on a monthly basis because I need to see how we're tracking revenues versus expenses on a monthly basis rather than waiting till the end of the year when our accountant generates our annual profit and loss statements.
As we're coming to an end, I would like to sum up some key points in this podcast. For example, developing financial accounts, you need specific information. You can see how the company's performance was during a specific period of time, and keeping an eye on your finances could help you look for potential creditors and investors as well as outside parties. With tax accounting, it's important to keep up with taxes as to keep the company out of trouble with the law. Now, with the inventory, you can monitor your profits and losses by regularly conducting an inventory. So this is the end of the podcast, so I'll see you later.